to discuss today a topic which is called FinTech-disruptive innovation in banking and beyond. There will be four areas of the presentation, for parts of the presentation. First will be introduction to FinTech. The second will be FinTech in banking. Third will be FinTech beyond banking, and then financial inclusion, one of my favorite subjects. 2020 has been an unprecedented year for all of us, as we all know. We're facing challenges which our society has never faced within the last 100 years. Hence why I'm delivering this presentation today from my office here in the UK, instead of being in beautiful Tbilisi, where I was born and raised. But as we all know, big challenges bring big opportunities, and that's what happened during the 2008 financial crisis, and which I witnessed myself here in London, and which I'm also going to talk about in a minute. That's what's happening now. Technology is what's helping to stay connected during the pandemic. Within the last 8 months, adoption of technology has reached the levels which are supposed to take probably 10 years. We order food, we speak to our friends and family online. UK Parliament is running its sessions online, and we are all here sitting and participating at Data First online. And now, as never before, FinTech is leading the way in this technology transformation. E-commerce payments, blockchain, cashless economy, fast transaction for fast fulfillment and delivery. COVID-19 has changed the way we do business, especially in the financial industry. It's almost completely eliminated cash and its use from our everyday life, which I think was hard to imagine probably a year ago. Digital technologies can be transformational, particularly for small and medium-sized businesses, that are actually building blocks of the economy. Digital economy will continue to be important for maintaining and enhancing the global competitiveness. We all come to face the new ways of doing the business. FinTech is helping millions of people do business, whether it's in London, New York, Beijing, Nairobi, Delhi, or then in Tbilisi. This historic shift, what we see, has changed what's possible for people. Companies like M-Pesa and BigPesa in Kenya, TransferWise, Monzo, and Sterling have changed how money is changing hands, how companies are transact money globally. But there is still a lot to do in technology, I think, and particularly in FinTech. 1.7 billion people in the world are still unbanked. They don't have bank accounts. How we solve the problem of financial inclusion? The answer is collaboration of government and private organizations, technology companies and technology startups in particular. And this will be the part of my presentation today. I would like to start my presentation with defining what the FinTech is. Very often people misunderstand it and think that the FinTech applies only to financial sector or banking, and I think they couldn't be more wrong. FinTech applies to banking as well as almost every other industry we either work or interact in our everyday life. FinTech is everywhere, and I'll speak about it in a minute. FinTech is a relatively new word in technology, and in my opinion, the birth year of FinTech, as we know it today, is around 2007, 2008. It was a period when these two guys created these two products. One was the iPhone, and the other was the cloud computing. And also, there was one other catalyst to FinTech, and that was the 2008 financial crisis, the biggest financial crisis of the century. As I mentioned earlier, I was living in London in 2008 when the crisis happened. And I was actually living near Canary Wharf, which is London's financial center. And I used to take a tube to go to the office walking through the financial center. That morning, I could see how people were living 25 Bank Street. That was the office of Lehman Brothers, knowing their life has changed forever. It was not a pleasant picture to watch. But again, big challenges bring big opportunities, and good example of that is Revolut. Revolut was founded by Nick Stronsky, who was actually the equity derivatives trader at Lehman Brothers, and he was let go in 2008 when the company collapsed. Revolut is one of the leading financial technology companies today, headquartered in London, that offers the banking services. It is currently valued at $5.5 billion. That's why I think that 2008 is a year when true fintech was born. Fintech, as we all know, is an abbreviation of two words, finance and technology. As I mentioned earlier, technology was the biggest catalyst of fintech revolution back in 2008. Thanks to mobile phones, cloud computing, and later APIs, the application programming interfaces, fintech has transformed into what we know today. People sometimes argue, is it a fintech or is it a tech thing? And then there is a difference. Fintech is the concept where the finance industry starts using technology to offer better customer experience. And the tech fin solutions are where the technology entrants enter the finance sector to change how users interact with the industry. And good example of the fintechs are TransferWise, Sterling Bank, Monzo, and aforementioned Revolut. Alternatively, the tech fins are companies like Google, like Amazon, Facebook, Apple, Baidu, Alibaba, Tencent. Jack Ma, Alibaba's group co-founder and executive chairman, described the difference between fintech and tech fin. He said there are two big opportunities in the future financial industry. One is online banking, where all the financial institutions go online. The other is internet finance, which is purely led by outsiders. And I think we all know who meant by that. But sometimes the large banks miss the idea of fintech, and they think that launching just an online banking app is fintech. When I see this happening, it often reminds me of Henry Ford's quote when he said, if I had asked people what they wanted, they would have said faster horses. And sometimes those large banks with just mobile banking apps remind me of faster horses, and fintechs like Monzo and Revolut remind me of the faster cars. I'll talk more about how big banks are adopting fintech when we move to the next part of my presentation. And therefore, and before I do that, I wanted to show you how quickly fintech is developing. Growth of global fintech funding hasn't stopped since 2008. Based on the figures, global fintech funding in 2017 was $50.8 billion. And that number reached 11.8 billion in 2018. It's 120% increase within a year. And there were more than 40 fintech unicorns globally at that time. In 2019, that figure was 141 billion, by the way. Fintech is banking. 6 months ago, I launched my second company in the UK. The company is called Untitled, and I'll tell you a bit more about it in a minute. As every business owner would do, first thing I did, when I registered my company, I called one of the major UK banks and told them that I need a bank account. They asked me to take a pen, sit down, get ready, relax, because list would be quite long. So, and my God, it was a very long list of the documents I needed to provide to the bank to open me a business account. First thing first, I had to visit a physical branch, do the interview with bank representative. Then it was impossible to get the appointment to that branch, and I had to go to a different branch, drive about an hour, and so on and so on. I'll be honest with you, when we launched the company, we already had suppliers and a couple of clients, so we needed a bank account quite quickly. So when I visited the bank, the branch had a very long interview, and they told me that our account will be ready soon, and that soon is 4 months. It's been 4 months. We're still waiting for the bank account to be open. And now I've been living in the UK for 16 years. I have my 2 other companies. I have my personal bank account. It should be simple and pretty easy for that bank to check my history, to run the AML KYC on me, and do all this much quicker than 4 months when we still don't have an account. But then what I did, we realized that, okay, this is taking forever, or we need to do something, we need to solve this problem. So what I did, I went on Open My Mobile and downloaded an app, and the app is called Tide. Tide is a UK fintech company similar to Revolut and Sterling Bank, offering mobile banking services to small and medium enterprises. Tide has a very interesting tagline. It says, "Get a business account in 15 minutes." And they truly mean that. It took me exactly 15 minutes from the moment I downloaded the app on my phone, went through the AML KYC, did my video selfie, uploaded my driving license copy. I had a UK bank account exactly in 15 minutes. Now, the reason I told you this story is because I want you to understand how much big banks are getting this whole fintech idea wrong. None of us are happy of the big banks, of course. Many of us are not. But we realize that they are sort of necessary evil. We need banking services for businesses, our daily life, and there are challenging banks and neobanks are coming and disrupting them. I myself have a personal account with one of the large banks, and I haven't used it for my day-to-day operations, for using my card for over 2 years. Why? Because I've changed to Monzo. And the reason why it happened is because one day I came back from holiday and I saw that my bank was charging me a transaction fee for every transaction I was making overseas, and that was €1. And then I checked Monzo, and Monzo said, "Yeah, we will not charge you anything. Go and use our card." And that's what happened. And that's how quickly I changed from my bank, which I've been banking with for over 10 years, to Monzo. Monzo is a challenger bank, which was launched in 2015, has over 3 million customers today. 10 years ago, if you would tell any CEO or a president of the large financial corporation or a bank that startup challenger banks would compete with them, they would probably love it. But now we all see what's happening. People love companies like Monzo and Tide, because it's not only the zero transaction fees they give you, they help you to better organize your life. Every transaction you make in Monzo is identified by its category, the type, such as eating out, groceries, entertainment, cash finances if you're withdrawing cash. And it's always clear at the end of the month what you spend money for, what are your expenses. And you also see where you spend your money, because they have connection to the Google Maps, and the minute you spend money, use your card somewhere, you can go in the app and see where you spend money, where you make this transaction. Monzo knows our lifestyle in this and is helping us to make life better. And that's what people like. Smart banking, of course, comes from technology, cloud computing and APIs. APIs allow you to integrate your services with other service providers like Monzo did with Google Maps. And that is Monzo offers to clients, and these challenger banks are offering to the clients, and highly regulated banks cannot do on such scale. This is Stripe. It was founded by two Irish brothers, John and Patrick Collison, when they were 19 and 21-year-old. They launched just 7 lines of code as an API in 2011, when they realized that it was really difficult to do checkout online. In 2016, their 7 lines of code was worth $9.2 billion. Now, please don't copy that code over there. That's not the original code. So you're not going to make $9 billion anymore. In 2018, their valuation reached $20 billion. And in 2019, it was $35 billion. In 2019, they employed 2,000 people. And in 2019, Stripe was worth twice as much as Deutsche Bank, which then was worth $14.1 billion and employed 91,000 people, 91,400. Now, I think you can see the difference, how much a company with just 7 lines of code was much worse than a Deutsche Bank. And this is what's happening today. New technology companies are changing the rule of game. One of the big reasons why big companies aren't able to catch up with likes of Stripe and Monzo and Revolut is the resistance to change. Let's take open banking. Open banking is the secure way to give providers access to your financial information via the API. It opens the way to new products, the services that could help customers, and small to medium-sized businesses get a better deal It could also give you a more detailed understanding of your accounts and help you find new ways to make most of your money. So it's basically the API technology, which allows you to connect your bank accounts into any third-party software products. It's an amazing technology and makes life much easier. Because using Open Banking Protocol, my accounting system, for example, is now directly connected to my bank. So what used to take me hours to reconcile with my bank, now it takes 5 minutes. You would say that is an amazing technology, every bank should be adopted, but you're wrong. Adoption has been very slow, actually. Partially it's because the banks are not so keen to share the information. And another big reason is the legacy system which banks have today. Now, talking about the legacy systems, I think the legacy systems is one of the main reasons why large financial institutions are being disrupted by fintech startups. Let's not forget, traditional banks were created during the Industrial Revolution, and they have a business model built for the physical distribution of paper through localized networks of buildings and humans. Their business model was always based on transactions using cash, checks, ledgers, bill of lading, etc., etc. A lot has changed in the Industrial Revolution, of course, but the core end system of today's big banks is the same, and this is the fundamental challenge for large banks. Because they have to reinvent their business model around the digital distribution of data in a globalized network focused on softwares and services. There are many banks in the UK that are still using a system which was written in COBOL. And the COBOL was designed, is a programming language. It was designed in 1959. So I think that explains everything. If you look at the large banks, you will see they have 10, maybe hundreds of different systems both together that have risen through multiple acquisitions and new projects. That is a very complex environment to build easy to use technology solutions around. One other problem I think the large banks have is that they are more product centric rather than customer centric. Within a smaller fintech firms, we can see more deconstruction of services. If you offer a current account, you offer the best current account. If you offer the business account, like Tide, I told you the story, you're offering the best business account. While large banks offer all of these things together, they have to think about the customer experience across product lines, as well as along the product lines itself. So in this case, they have more complicated business model. And also there's a cultural. If you look at how modern technology companies work, there's a lot more creativity, speed and flexibility compared to large banks. There is also less structure and hierarchy. While the big financial institutions have been around for hundreds of years, and there is a very complex hierarchy. Decision-making process is very lengthy and slow. And if you want to change things, deploy new technology, board has to make a decision. And we all know how board is making decisions. First thing, they look into what would be financial risk, and so on and so on. And we always know that financial risk is always there when you're deploying the technology. And at the end of the day, CEO would prefer probably to keep status quo and not jeopardize his end of the year bonus. If banks just add digital as function, a project and a channel to their existing structures rather than reinventing their business model, they're doomed. Adding mobile banking app doesn't mean the bank is reinventing their business model. If you would call Credit Suisse a couple of years ago and ask them if they had an online banking, they would answer you, yes, you can send us an email. That's what they considered the online banking. I mean, they have progressed slightly since then, but it's still not much. Or it is very difficult to explain to executive management of the bank how technology is going to change their bank when they don't understand technology. My wife's been a bank auditor for many years, and she once told me a story how one of the big bank VP wrote his password on his computer's screensaver so he wouldn't forget it. I'm not saying every bank is the same or every executive is the same, but because the banks understand the challenge and they're pivoting from being branch-based structure to a digital structure. Banks actually have been shutting down their physical branches massively in the UK. Today, there are as many physical branches in the UK as it was back in 1960. If banks want to catch up with challenger and neobanks like Monzo and Sterling Revolut, they need to change quickly. They need to implement more automation through cloud and AI. But it's not all doom and gloom with large banks, to be honest. They're responding to the challenges that they're trying to catch up. Some less, some more. A good example of such banks would be JP Morgan, UBS, and Barclays. Today, JP Morgan Chase, in my opinion, is more technology company than a bank. Why? Because they employ more technologists than Facebook and Twitter combined. JP Morgan's technology investment is over 10 billion a year. That's how much they spend on technology. JP Morgan was actually one of the first companies who approached us, the Centigen, when we developed one of our financial software for alternative investment sector. The reason I'm saying is that they're always they're looking not only the small big companies, but also what's happening on the startups, small companies, what is coming on the new technology. Another good example of the technological advancement is UBS. UBS is spending a lot of money on digital transformation, especially on AI. They use several thousand bots to automate their day-to-day business operations and processes. And that is what I call true fintech. When you change your entire culture when it comes to technology and not just launch a mobile banking app, and you call it a digital transformation of fintech. Barclays will be another good example as well. Barclays was worth 30 billion in October 2016, employing 130,000 people. But through the technology automation and digital transformation, they managed to decrease their employee count down to 83,000 in 2008, and bank was worth 40 billion. And that through the automation, through the technology. Another good example would be a client of ours, actually. They are one of the leading financial companies here in London. We developed for them a software bots similar to UBS. And after year one, I was told by their CEO that through the automation we did for them, they could see approximately 2 hours time saving per employee per day that led to average a 5% revenue increase in year 2. I think it's a pretty good result. Now, regarding the TechFin, which I mentioned earlier, TechFin solutions are where the technology enters the finance sector to change how users interact with the industry. And if we want to talk about TechFin, we have to take a journey to China, Southeast Asia, and Africa. Because these 3 regions have, in my opinion, one of the most successful fintech startups. The reason why China, for example, being more successful in TechFin as well as the fintech is because China went pretty much from no banking straight into the fintech. They made sort of a leap into the banking technology. China had no financial, pretty much no financial infrastructure in place around 20 years ago. Much of what is there today has come from nowhere. It has all been implemented just in the last 20 years. That is possibly why the country has the largest number of fintechs than anywhere in the world, and they are most innovative. 3 out of world's 20 most transformational companies are Chinese fintech companies today. These are Tencent, Alibaba, and Ping An. And of course, there is also Alipay and Financial, JD Finance, etc., etc. In 2012, China had near zero mobile payments and went up to $41 trillion by the end of 2018. With 54% of what's coming through Alipay and 38% via WeChat Pay. These are 2 major payment providers in China. Alibaba is another good example of TechFin company. There is a Singles Day in China, which is similar to our Black Friday we have here in the UK or Europe and in America. During a Singles Day, Alibaba process 256,000 transactions per second. Just to give you a comparison, Visa processes about 5,000 transactions per second. Where these tech companies are coming with large banks is that are competing with the large banks is the service they offer to their customers. Amazon, for example, Amazon is offering loans to its merchants and with almost no fee. Payments are gradually moving into more areas of saving and investments. No one would ever think that Google would make a move towards big banking or towards banking. Why? Because the banks are their massive users of their cloud technology, cloud services. Nevertheless, Google made an announcement around 2 weeks ago about Google Plex. It says, beginning of 2021, customers will be able to obtain digital bank accounts called Plex from within Google Pay. The accounts will be offered by 11 banks and credit unions, and the user will be able to get both checking and savings accounts. After a few days, they made another announcement. It says, Google is joining with a small British bank to develop a new type of platform that mixes the personal relationship of traditional banking with technology and infrastructure of new digital banks. Yes, it's not exactly the Google becoming a bank, but it's clearly a major move towards that direction. Tech giants like Google see more gain from working with the banks than trying to take on them. But a couple of years ago, nobody would even think that Google would make that move. Same with the Facebook. Their unsuccessful launch of Libra currency and Calibra mobile wallet is now Diem and Novi. They're reinventing it. In my opinion, it's just a matter of time before Facebook makes the same move. And let's not forget about Apple, another big player. One of the main reasons why technology companies are creating serious competition to large banks is partnership through technology. That's how they are winning. Same as Google's partnership with UK banks. Those partnerships require data exchange, and data exchange is achieved through APIs, through digital transformations. Now I want to move to the part 3 of the FinTech beyond banking. Another interesting subject. Let's look at the APIs and how technology allows non-banking companies to move into FinTech. As I mentioned earlier, I launched my second company in London around 6 months ago. It's called Artisio. It's providing SaaS-based back-office management system to auction houses. Now, I think many of you may not be familiar with auction business, but I can tell you one thing. Pretty much nothing has changed in how auction businesses are operating within the last 2 centuries. But the last 5 years have been extremely interesting in this business. Again, thanks to cloud computing and API technologies, large parts of traditional auction businesses moved online. And of course, COVID has accelerated this massively. Artisio comes with the API and allows auction companies to connect to their service providers like online bidding, online payments, accounting, banking, ML, KYC. That helps our clients to offer better services to their customers. We have many partner companies we are working with, who we are connecting through the API. And what we are achieving with that is like connecting with Stripe, connecting with the MailChimp, connecting with the Salesforce. What we are achieving with that is that we are deploying new services and new products much faster than we would do it ourselves. I mean, why do we have to reinvent the wheel? Why do we have to create the email marketing system when we can quickly plug into the MailChimp and just give it to the client, sell it to the client? Or why do we have to reinvent the CRM when we can plug it into the Salesforce? Or online payments, we can do it through Stripe. And when I look at it, how all this is working through the partnership. We think now where we have auction houses and their clients, and the auction houses are selling arts and collectibles to their customers, I wouldn't rule out that RTCO moving into banking and offering credits and loans, or maybe even bank account to our clients in future, like Amazon does. Why couldn't we? And that's how one day big banks are going to get another competitor. And that's how it is progressing. This is how the startups are thinking and transforming. Every company, in my opinion, could be a fintech company. People sometimes ask, will big banks disappear one day? And I would say that's not possible. It would be a silly thing it will be silly to think. But in my opinion, what is going to happen is big banks and big banks and fintech companies are eventually going to partner. And the big banks will move to the back and become sort of the engines of banking, and let the fintechs and technology companies be a front face and deal with the end clients using their technology innovations. Because we still need banks. Banks are regulated. People trust banks because banks are regulated. Just a quick demonstration about how much fintech companies are growing. This is the, you can see from this slide, this is the S&P 500 and Forbes Global 2000 companies ranked highest in the new growth transformation. You can see there are, out of 10, 3 are fintech companies, and almost all of them are technology companies. I think that shows a lot. I want to quickly move to financial inclusion, which is very interesting topic for me, and I'm very excited about financial inclusion. I think there are a lot of interesting things happening in financial inclusion, and the end result is amazing. I think when it comes to financial inclusion, there is a moral case as well as an economic. I think the moral case is very obvious. There are hundreds of millions, if not billions, of people in the world who have no access to the financial services today. I think the latest figure, latest number is around 1.7 billion. I think that fintech has a big opportunity to fix the financial inclusion issues. As we all know, financial inclusion is mainly developing countries' issues, but these countries have huge potentials. According to the latest studies, emerging markets must grow by 3 to 5 trillion in GDP, 4 trillion in deposit growth, and 2 trillion in credit growth. Huge numbers, huge, but they need technology to support this growth. We already see amazing results. We are in year 2020. There are people living in Africa today who have no water, no electricity, but almost everyone has a mobile phone. There are 1 billion people in Africa who have mobile phones today. And Africa's GDP is estimated to grow by 6% per year. Companies like M-Pesa and BitPesa in Kenya are already delivering amazing fintech products and services in Africa, helping people with financial inclusion. If you live in Zambia, for example, you do business with, let's say, Saudi Arabia, which is one of the big partners, trading partners in Africa, you're out of luck. It is impossible to buy dirham unless you first buy US dollar. So all these conversions increase cost of business by around 12%. It is estimated that around 40% of all transactions in Africa go through via US SWIFT system. And then BitPesa guys came in and said, hey, why can't businesses in Africa trade with outside world directly? So what they create is a currency trading platform based in Bitcoin. So their business model is simple. They get local currency from the local business, send digital currency in Bitcoin, and let's say the supplier in Saudi Arabia or anywhere in the world. And they have them paid out in dirham or yen in Japan in real time. Very simple. It takes less than 2 hours to complete transaction over Pasa. And you can see how easy their business model, how simple their business model is. BitPasa currently has 26,000 customers. They have already traded over $500 million US, and they are first blockchain company which was licensed by the UK Financial Conduct Authority. So I think that another big potential for financial inclusion in terms of technology is mobile phones. They have huge impact on the financial inclusion. In emerging world, there are 450 million farmers, for example, who are paid in cash for agricultural sales because they are unbanked. But thanks to companies like M-Pesa in Kenya, over 10% of adult farmers today already receive payments for sales for their agricultural products electronically over the mobile. Kenya is actually an amazing story. When it comes to electronic payments, I do have personal business connections to Kenya, and when you want to pay someone money in Kenya, they don't want cash anymore. If you give them the cash, they'll probably say no. You know what? Can you transfer it to M-Pesa? In 2019, M-Pesa had 41.5 million active subscribers who carried out over 12 billion transactions, and that's the number before COVID. And we see similar trends in Southeast Asia. Singapore, for example, is doing a great job helping the SMEs. They created Singapore Monetary Authority. A monetary authority has created a system with Thailand National Bank to help the migrants who are working in Singapore to make a quick and easy and cheap direct transactions to Thailand or Malaysia through the PayNow system. Last but not least, it is DBS and JP Morgan and Temasek that are also developing a joint cross-border payment system that will help the Singapore SMEs for quick cross-border transactions. And last one I wanted to quickly cover, to talk about is a very successful story about the Philippines bank, Kantilan Bank, and what they're doing in Philippines. Approximately 30% of Philippines population is unbanked. So if bank wants to issue a loan, even as small as $100, the bank representative has to travel to the village to do the documents and all that. And for last 10 years or so, Catalan banks in Philippines have been doing an amazing job for helping unbanked to give the bank accounts, helping them with transformation. And the Catalan banks started their, how they managed it is again through the digital transformation process. I was attending a Singapore FinTech Festival that was also online last week, and the Catalan Bank CTO mentioned that first thing when they started their digital transformation process, first thing they did, they created the APIs. And through the APIs, they managed, when they finished their majority of the digital transformation, through the APIs, they managed to launch a full mobile banking in 2 months. 2 months. It will be really hard to find a bank who would launch their full mobile banking platform in 2 months, and that's thanks to technology. I think that's an amazing result. So there is also the IPIX platform, which Singapore and government is using together with Malaysian and Thailand government of helping the SMEs for cross-business transactions and so on. And I think that, to sum up, I think we all agree that the FinTech is not just for banks and financial institutions. FinTech is everywhere, and it will become part of our daily lives even more. It is changing people's life for better. Everything we will change even more significantly when 5G network kicks in and when 5G network and IoT is launched. And that's together with blockchain and AI, which we haven't covered today because we don't have enough time, unfortunately. So it's very exciting times ahead, and it will be really interesting to watch this part of the technology, how it's progressing. So that's all for me today. I just wanted to quickly mention a couple of credits from my presentation. Just wanted to give credits to Chris Skinner, who is a very well-known figure in fintech industry. He's one of the well-known bloggers and the author of several interesting books. If any of you are interested in fintech, I would highly recommend to look up Chris Skinner. And also, my credits go to Oxford University Side Business School and Harvard Business School for today's presentation. So again, really thankful once again for DataFest organizers for inviting me, and to everyone who was listening to my presentation today.